This is gonna blow your mind. What's up, everyone? It's from Invest IQ, and let's be real, who doesn't love passive income? Imagine waking up every day to a bigger bank account, all thanks to your investments doing the heavy lifting. That's the beauty of dividend growth stocks. Want to turn your savings into a rising stream of income every year? Imagine owning stocks that give you a pay raise annually without lifting a finger. These aren't just stocks, they're dividend growth machines. In today's video, I'm breaking down the top 5 dividend growth stocks for 2024 that could supercharge your passive income. But here's the catch. Not all dividend stocks are equal. Some look great but won't survive a market crash. Don't worry, I'll help you steer clear of those traps. Let's get started. First on our list is a company you probably interact with every single day, Visa. Now I know what you're thinking. Credit cards, right? But Visa is more than just plastic. It's the pipeline, the global network that processes trillions of dollars in transactions every year. Think about it. Every time you swipe your card, tap to pay with your phone, or shop online, chances are Visa is somewhere in the background, making that transaction happen. And with the world rapidly moving away from cash, this is a trend that's only going to get bigger. But here's what really excites me as an investor. Visa has a rock-solid track record of rewarding its shareholders. We're talking about an average annual dividend growth rate of 17% over the past decade. That's right, 17%. That means your dividend payments are essentially doubling every 4 years or so. Now you might be thinking, that's great, but is that growth sustainable? And that's a fair question. But here's the thing. Visa is a cash flow machine. They generate tons of cash, and they've shown a commitment to sharing that cash with investors through consistent dividend increases. Plus, as more and more transactions happen digitally, Visa is perfectly positioned to benefit. They're like the toll booth on the digital payments highway, collecting a small fee on every transaction that flows through their network. So if you're looking for a dividend growth stock with a wide moat, a long runway for growth, and a history of rewarding shareholders, Visa is definitely worth a closer look. Alright, moving on to a company that needs no introduction, PepsiCo. We're talking about the beverage and snack giant that's been a household name for decades. From Pepsi to Gatorade, LAYs to Doritos, Quaker Oats to Tropicana, their products are everywhere. But here's what makes PepsiCo a compelling dividend growth stock. They've been consistently increasing their dividend for over 50 years. That's right, 50 years of putting more cash in their investors' pockets. That kind of track record speaks volumes about their commitment to shareholder value. Now, you might be thinking, isn't the soda industry struggling? And you'd be right to some extent. But here's the thing, PepsiCo is much more than just sugary drinks. They've done a fantastic job of diversifying their portfolio into healthier options like bottled water, teas, and sports drinks. And let's not forget about their snack business, which is an absolute powerhouse. I mean, who doesn't love a good bag of chips or a refreshing Gatorade after a workout? These are the kinds of products that people buy no matter what's going on in the economy. This brings me to my next point. PepsiCo is a classic example of a consumer staples stock. These are companies that sell essential goods that people need regardless of economic conditions. Whether we're in a recession or a boom, people still need to eat and drink. And that's why PepsiCo tends to perform well, even when the market is going through a rough patch. Their products are always in demand, which provides a level of stability and predictability that's really attractive to dividend investors. Chapter 3. Broadcom, Tech Innovation Meets Dividend Powerhouse. Now let's shift gears and talk about a company that's at the forefront of the tech industry, Broadcom. They're a leading designer, developer, and global supplier of a broad range of semiconductor and infrastructure software solutions. In simpler terms, they make the brains behind many of the devices and systems we rely on every day. We're talking about smartphones, data centers, networking equipment, and so much more. But here's what sets Broadcom apart from many other tech companies. They're also a dividend growth machine. Over the past few years, they've been aggressively increasing their dividend at a double-digit pace. That's right, double-digit dividend growth in the world of tech. Now you might be wondering, what's fueling this incredible dividend growth? Well, a couple of things. First, Broadcom operates in a high-margin industry. They have a strong competitive position in their core markets, which allows them to generate a lot of cash flow. Second, they've been really smart about acquisitions. They've acquired several companies over the years that have strengthened their product portfolio and expanded their reach into new markets. But here's the best part. Broadcom is still relatively undervalued compared to many of its tech peers. Their price-to-earnings ratio is reasonable, and their dividend yield is attractive, especially in today's low-interest rate environment. So if you're looking for a way to add some tech exposure to your portfolio without sacrificing income, Broadcom is definitely a company to keep your eye on. Chapter 4. Exxon Mobile, the energy giant fueling your portfolio. Alright, let's talk about a sector that's been making headlines lately. Energy. And when it comes to energy giants, Exxon Mobile is a name that immediately comes to mind. They're one of the largest publicly traded international oil and gas companies in the world. Now I know what you might be thinking. Energy stocks? Aren't those super volatile? And you're not wrong, the energy sector can be a bit like a roller coaster ride at times. But here's the thing about Exxon Mobil. They've weathered many storms over the years and have consistently emerged stronger. In fact, they've increased their dividend for over 40 consecutive years. That's right, 40 years of uninterrupted dividend growth. That's the kind of stability and reliability that income investors dream of. But here's the real kicker. With the global demand for oil and gas still on the rise, Exxon Mobil is well positioned to capitalize on this trend. They have a massive global footprint, a diversified portfolio of assets, and a strong track record of innovation. They're also investing heavily in renewable energy sources like solar and wind power. They know that the future of energy is changing and they're adapting to stay ahead of the curve. Now, I'm not saying that Exxon Mobil is a risk-free investment, no investment is. But if you're looking for a dividend growth stock that offers a compelling combination of income, growth potential, and value, Exxon Mobil is definitely worth considering. Chapter 5. McDonald's serving up dividends with a side of growth. And last but not least, let's talk about a company that needs no introduction, McDonald's. The Golden Arches are recognized around the world, and for good reason. They're the undisputed king of fast food, serving millions of customers every single day. But here's what many people don't realize. McDonald's is also a dividend growth powerhouse. They've been increasing their dividend for over 45 consecutive years. That's right, 45 years of putting smiles on both their customers and their investors' faces. Now you might be thinking, fast food? Is that really a growth industry? And you'd be right to question that. The fast food industry in developed markets like the United States is fairly mature, but here's the thing. McDonald's still has plenty of room to grow internationally. They're aggressively expanding into emerging markets like China, India, and Brazil, where the demand for fast food is skyrocketing. And as they open more restaurants and increase their global footprint, their profits and dividends are likely to follow suit. But McDonald's isn't just about growth, they're also about efficiency. They're constantly innovating and finding ways to improve their operations, reduce costs, and boost their bottom line. And let's not forget about their real estate. McDonald's owns a ton of prime real estate around the world, which provides a significant asset base and generates a steady stream of rental income. So if you're looking for a dividend growth stock that's a global icon, has a long runway for growth, and a history of rewarding shareholders, McDonald's is definitely worth a closer look. Chapter 6. Boost your passive income with dividend growth stocks. So there you have it, my top 5 dividend growth stocks for 2024. These companies represent a diverse range of industries, from technology and consumer staples to energy and fast food, but they all share one thing in common: a proven track record of dividend growth and a commitment to rewarding their shareholders. Which of these stocks caught your eye? Or do you already own any of them? Share your thoughts in the comments below. I'd love to hear from you. And if you found this video helpful, give it a thumbs up and hit subscribe for more insights like this. Remember, at InvestIQ, we're here to make your money work harder for you. I'll see you in the next video.